Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Tony Zhang, Chief Strategist at OptionsPlay, for a review in the Nordics markets and option strategies to trade the trends. Tony, it's great to see you. Welcome back to Trade Talks.
Thank you so much for having me back. Looking forward to giving an update on where the Nordic markets are currently trading.
All right, sounds great, Tony. Let's go through your first 4 slides here as we take a look at the major markets in the Nordics.
Yeah, so we'll start off with the Stockholm S30 index, which is the primary index in the Nordics. And right now we are at what I consider a very critical level. The OMX S30 managed to get back to its February 2019 highs that it put in right before the coronavirus sell-off here. So we are at a major resistance level. The question on many investors' mindset at the moment is whether the markets are going to break out higher, because if we do break out higher, I certainly think that there's substantial upside. But if we fail at these resistance levels, as we started to see some of the US markets waver a bit, there's quite a bit of downside as well. So the question is really the directional view. We are at a very pivotal moment for many investors. When we pivot a bit to the OMX Copenhagen 25 index, the Danish markets have actually been the strongest out of the 4 Nordic markets, actually showing quite a bit of weakness here over the past couple of weeks or so, failing to break above the recent highs here around that 1600 level here to the upside. So the Copenhagen perhaps giving us a little bit of a preview of what we might see in the Swedish markets with this double top forming here at that 1600 level. But if we do break out to the upside, I do think there's substantial, but I think a substantial upside. But I think for now, it's more likely that you have this double top and it trades more of a range bound motion going forward. When we look at the Helsinki 25 index, this is really one of the markets that have been held back largely, but have started to again gather some strength here. Actually topping that 4,500 level recently, starting to break out a little bit here to the upside. The Helsinki index predominantly are materials and industrial names, which have actually been fairly strong from a sector perspective. So gathering a little bit of strength, playing a bit of catch up to the Danish markets and the Swedish markets. And lastly, when we look at the Oslo 20, this is predominantly oil and gas, a lot of those types of names, and those have been doing very well over the past week or so. So we have seen some outperformance here for Oslo. Flirting with this 800 resistance level, which has been forming a bit of a triple top here. Now, the question is whether or not energy can hold on to these gains or they start to trade off here. So this triple top is a very important level for the Oslo 20. But the main thing that I think that is important for investors that has changed substantially over the last week is the decrease or the reduction that we have seen in terms of implied volatility of options, whether it's due to the US elections, whether it's due to the news on the vaccine news and a lot of investors breathing a bit of sigh of relief. But on the backdrop of the fact that you have considerably rising number of COVID cases across the globe, implied volatility is actually substantially cheap because it's trading at post-pandemic lows here right now. So for options traders, what this means is that regardless of what your views are, whether you think these double tops that I've just referred to, these major resistance levels, if you think they're going to break out and start moving substantially higher, you can buy call options to play for that further upside. Or if you're a bit more bearish and you think these resistance levels are going to hold, you can buy some puts. This is a rare opportunity since the start of the pandemic where implied volatilities are relatively low and buying options are actually fairly cheap.
Let's take a look at Sweden's economic recovery. Is it chose to take a novel approach to tackling the COVID-19 pandemic?
Yeah, very novel approach, pretty much, out of step with every other country in the world. And yet Sweden right now is also going through the same type of exponential growth as the rest of Europe and the US is currently experiencing. But when we're looking at the economic numbers so far, they're looking fairly strong. Swedish PMI actually seeing levels that we haven't seen since late 2017, early 2018. So manufacturers and services relatively strong on that side. And on the same token, consumer confidence continues to actually strengthen here. So we're seeing across the board, both consumers and businesses, actually feeling fairly confident in the current recovery that Sweden has. So that's part of why we've seen such strength from the equity markets, and perhaps that's going to point us to a breakout here to the upside. But those are some of the things we're paying attention to from an economics perspective.
Let's take a look at our first trade in the auto sector.
Yeah, the auto sector has actually been very strong off of the coronavirus sell-off here, and Volvo, in the manufacturing and the auto space, has really broken out to the upside here. Volvo breaking out above this recent 180 double top here. Now, like I said before, one of the things that drastically have changed over the past couple of weeks is implied volatilities have become significantly cheaper. So this is why we're now switching some of our option strategies from selling, such as credit spreads, cover calls, cash secured puts, now to looking at buying calls, buying debit spreads. So that's a trade that I'm looking to utilize here to play for this breakout or a continuation of this breakout. I'm going out to January. I'm buying the 190 210 call vertical here, paying about 810 crowns on this stock that's currently trading about 193 crowns. That's just a little over 4% of the underlying stock's value that I'm risking to play for a substantial breakout or a continuation higher here on Volvo. And from a trading perspective right now, especially when equity markets are near overbought conditions and you're near major resistance levels, you want to make sure that you protect your downside using strategies like a debit spread that allow you to play for that upside with leverage, but actually risk, in this particular case, a fairly small percentage of the stock's value to play for that upside.
All right, and finally, our last trade in real estate.
Yeah, so real estate as a sector hasn't performed particularly well, even though we saw some gains this week off of the vaccine news. This is one of the sectors that gained substantially on Monday, but gave a lot of that back. But BALD, which is one of the developers here in Sweden, actually bucking some that trend, continuing to break out higher, especially during the coronavirus sell-off. So this is a stock that really has substantial outperformance compared to the broader market. So we're also, similar like Volvo, looking for some continued outperformance on this breakout of the double top, and using, again, a very similar trade structure that we're using here with Volvo for this same reasons. Here I'm going out to March, so buying myself a little bit more time, almost 4 or 5 months worth of time, buying the 490 570 call vertical here on a stock that's trading right now at about 490 crowns. That's risking only 5% of the underlying stock price to play for fairly substantial upside here over the next 5 or 6 months here. So again, the key here right now is that we have a rare opportunity where implied volatility has collapsed over the past just few days, really, since the news of the vaccine news from Pfizer, that where we have an opportunity now to start buying some options, and I'm taking advantage of this cheap and elevated, implied volatility using trade structures like this debit spread.
Tony, finally, how can Trade Talks viewers get in touch with you for more on Nordics OptionsPlay?
Yeah, so if you want to learn more about these types of strategies or analyze these strategies on your own, we have a fantastic relationship with the Nasdaq Nordic team where you can have access to OptionsPlay completely free of charge, where you can analyze the stocks and indices of all the Nordic derivatives available to you here on the OptionsPlay platform in real time by signing up for a free account at OptionsPlay.se. This includes not only the platform, we do weekly education as well as market outlook sessions to give you a better understanding of the current market environments.
All right, Tony, great to see you as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.